The world of money is feeling tense today. It is like a fast-moving game where the biggest players are all making moves at once. Right now, three giant forces are pulling at the global financial system: the United States, China, India. These high-level maneuvers do not just stay in the halls of government. They ripple outward, shaking markets, influencing investors, changing how we use money. The ground is shifting beneath our feet, and understanding these large-scale tremors is the first step to navigating the new landscape. Recently, the tension became impossible to ignore. China's foreign ministry issued a sharp statement accusing the United States of creating misunderstanding and panic in global markets. And the market listened. Almost immediately, asset prices wobbled. At the same time, India made a decisive move, signaling its rejection of a unified BRICS currency plan. This effectively put the brakes on the project. The dream of a powerful new global currency has hit a major roadblock, reinforcing the dollar's position while highlighting complex alliances. Back in Washington, domestic politics adds another layer of uncertainty. A government shutdown has stretched on for days, creating a sense of paralysis that makes global investors uneasy. Yet, Wall Street continues its relentless march forward. Major financial firms are lining up applications for new products like XRP, SOL, Doge, Polkadot, HBR, and Cardano ETFs, among others, preparing their systems for a potential flood of new capital. The world is simultaneously tense and incredibly busy, like a high-stakes international tug-of-war where the rope is the future of money. Now let's zoom in from the global stage to a company making very big waves: Ripple. This is a company that has been exceptionally active, signaling its ambitions with massive investments and strategic purchases. They are not just talking, they are spending. For example, Ripple launched a significant bounty program, offering up to $200,000 to ethical hackers. A smart, confident move. It signals seriousness about security and fixing weaknesses before they are exploited. Ripple then announced it was acquiring G-Treasury for a reported $1 billion. This is not a small acquisition. The purchase helps Ripple integrate its services with complex corporate treasury operations, bridging traditional finance and digital assets. To top it off, Ripple declared a $1 billion buyback of XRP. The World Bank mentioned Ripple and XRP in a cross-border payments report, a notable, if not endorsing, signal. Rumors link Ripple to financial giants like BlackRock. If real, it could change the game. Leadership says the tough US regulatory period is behind them. Ripple's billion-dollar flex is clear, using capital to build the infrastructure to prove it. The next major shift we need to talk about is tokenization. Tokenization is the process of turning a real-world asset into a digital token. Example, a piece of real estate. Example, a share of stock. Example, a bar of gold. Those tokens live on a secure, shared ledger called a blockchain. Influential finance leaders say this will become the new standard, a rewiring of market plumbing. Proof: tokenized gold now sees significant daily trading volume. Tokenization promises to make transacting faster, cheaper, more accessible. Imagine buying a small fraction of a building with a few clicks. You could trade a piece of fine art almost instantly, worldwide. But it requires clear, sensible rules and robust platforms. From banks to individuals, everyone will feel the shift. It is redefining ownership for the 21st century. Section 4. The Stablecoin Scramble, the race to become the new bank. Stablecoins are digital tokens designed to maintain a steady value, often pegged to the US dollar. They aim to offer crypto speed and cost without wild price swings. Companies see a massive opportunity. They want digital dollars as the foundation of a new banking system. But the path is filled with challenges and controversies. For instance, Tether paid a $300 million settlement. PayPal's payments partner accidentally minted a ridiculous number of stablecoins due to a technical error. Meanwhile, players from fintech to electronics, Sony, are jumping in. Countries are tightening rules. If you operate like a bank, you will be treated like one. This scramble decides who controls the flow of money. It is a mad dash to become the trusted source for digital dollars. The stakes will define banking for decades. Section 5. Scams, seizures, and the shadow side of progress. As adoption grows, so do scams, fraud, and illicit activity. In a massive operation, law enforcement seized an estimated $15 billion tied to a single crypto scam. It caused immense financial and emotional harm. Scammers use urgency, exclusivity, and impersonations. Always verify before you invest. Guaranteed high returns with zero risk are giant red flags. Do your own research, understand the project, and check independent audits. Section 6. Your next move. The financial world is upgrading. Don't crash out, cash in. From clunky to connected, faster, feature-rich. Educate yourself. Start small. Read trusted sources. Prioritize safety, strong passwords, two-factor, and caution with unsolicited offers. Maintain balance with traditional, insured accounts. Consider consistent investing and a long-term view. The tokenized era is here. Be curious, be cautious, and act with intention. The smart money isn't leaving, it's evolving. Peace.